The other barrier we have to break above is a 200-day moving average. And these are just basic walls that define a bear market rally or a bigger bottom is in place. So if we can break above this and the 200-day moving average, that's a very strong support that this was a more meaningful low than many may have anticipated. So those are the levels to be watching. If we look a little deeper at our indicators, the RSI, some of the most valuable information of the RSI or any oscillator is really in the middle, not really the tops and the bottoms, but in the middle. And they tend to have history, and they tend to repeat at certain areas. This B wave right here, this was the last gasp of the bulls before the C wave took us down. And this was where the RSI topped when that happened, which was right around 65 on the daily. And as you can see, we're trying to break above that, which is pretty good. We still haven't broken above it firmly, but if we can break above this and move into 70, that's going to be early evidence to support this as a more meaningful low. The composite index it's just basically the RSI with a momentum factor built into it. It's also tapping up against major resistance. This is where the B wave topped right here. And as you can see, we never broke above there in any of the attempts to bounce. And so we're trying to right now. So that's also some pretty good information. The internals are supporting that we could get this rally could extend a little bit. So if we dive a little deeper into what could possibly be playing out, let's do this real quick. We'll go on to a smaller time frame, get more context. We only have 3 waves up. So this move off the low was 3 waves, 1, 2, 3. Failure down here was a warning to us. The last time we saw 3 waves off the low and failure, we saw new lows, right? That didn't happen this time. That's good news. On top of that, we saw the market starting to move up on bad news, meaning that all the inflation information, the Fed hikes, all that is likely priced in. So if we're going to go down, it's going to be on something new that the market has not anticipated. That's typically how these work. So we're in this, worst case scenario, B wave scenario that should play out longer in time. We're anticipating into the fall sometime. But you have to keep in mind that we only have 3 waves off that low. So 1, 2, 3.